Trading in the Forex foreign exchange market involves buying and selling currencies with the goal of profiting from changes in their exchange rates. Here's a step-by-step guide to help you get started with Forex trading. 1. Learn the basics of Forex trading currency pairs. In Forex you trade currency pairs E, G, USD. The first currency EUR is the base currency and the second USD is the quote currency. The exchange rate shows how much of the quote currency is needed to buy 1 unit of the base currency. Major pairs. These include the most traded currencies like USGB, PUSD, USDB, etc. Leverage. Forex trading often involves leverage, which allows you to control a large position with a relatively small amount of capital. While this can amplify profits, it also increases risks. PIP. A PIP is the smallest price move in a currency pair, usually the fourth decimal place E, G, 0.1. 2. Choose a reliable Forex broker. Regulated broker. Choose a broker that is regulated by a reputable financial authority E, G, CFTC, FCA, SISC to ensure your money is secure. Broker features. O. Look for low spreads, the difference between buy and sell prices. O. Ensure the broker offers the currency pairs you want to trade. O. Check for account types, leverage options, and trading platforms like MetaTrader 4 or 5 or proprietary platforms. O. Evaluate customer service and educational resources. Popular Forex brokers. OIG Group, Forex.com, OOANDAOXM. eToro also supports copy trading. 3. Open a Forex trading account. Once you select a broker, open a trading account. Choose between a demo or live account. Demo account. Start with a demo account to practice with virtual funds before risking real money. This will help you understand the platform and develop a trading strategy. Live account. When you're ready, open a live account and deposit funds. 4. Learn fundamental and technical analysis.